The nation says farewell to the 38th President of the United States, Gerald R. Ford. At a service at Washington's National Cathedral, the late president is honored as a leader who helped heal America in a difficult time.
Two people who know Ford's legacy well are our guests tonight. One of them worked in the late president's administration. They'll give us some insights into the man and the economic decisions Ford made that shaped America in the 1970s.
A gloomy outlook from one of America's biggest home builders, Lennar. The company says it's going to lose money in the last quarter, and as far as it's concerned, there are no signs of the housing slump ending yet.
But there could be some signs of life in gold prices. We'll get some analysis on where commodities prices, including gold, could be heading in 2007.
I'm Paul Kangas.
And I'm Suzanne Pratt. Susie Garib is on assignment tonight. This is Nightly Business Report for Tuesday, January 2nd.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Wall Street and Washington put aside business for a day today as the country said goodbye to its 38th president, Gerald Ford. With financial markets and government offices closed for a national day of mourning, the late president was remembered in a moving tribute at the National Cathedral. Washington Bureau Chief Darren Gersh reports.
Gerald R. Ford was honored today with all the somber ceremony surrounding the great office he did not seek, but where he served ably. President Bush said after the trauma of Watergate, Ford brought calm and healing to the nation.
Gerald Ford assumed the presidency when the nation needed a leader of character and humility. And we found it in the man from Grand Rapids.
Remembered for his character, Ford was also praised for his accomplishments. He oversaw the end of the nation's struggle in Vietnam, rescuing many who had sided with the United States. He was criticized for signing the Helsinki Accords, which set a new standard for human rights. But historians now say that agreement helped undermine the Soviet Union. Former Secretary of State Henry Kissinger recalled Ford's message to a former Soviet leader.
When looking directly at Brezhnev, he proclaimed America's deep devotion to human rights and individual freedoms. To my country, he said, they are not cliches or empty phrases.
Those who served with Ford include in his legacy the beginning of deregulation of the U.S. economy. The 38th president crafted legislation that would one day end controls on the nation's airlines. At the time, such efforts sparked protests, and there were pointed reminders from Ford family pastor Robert Certain that while he was in office, the 38th president was often savagely criticized.
Mr. President, we did not always treat you well when you chose the right course for us. Then and now, you are a man of the kingdom of God.
By now, we all know Ford was a gifted athlete, playing center on the University of Michigan's championship football team. Less known is how his years in Congress made him an expert on the federal government. His former budget director, James Lynn, says Ford was the only president since Truman to brief the press on the federal budget, a document that is often measured by how much it weighs.
We held it over the State Department because we didn't have an auditorium big enough to hold all the press that was going to be there because they thought he was going to fall on his face. And they were all sitting there, you know, like this. He never called on any of us up on the stage for an answer or said, do you have anything to add, Jim? He'd look over, do you have anything to add? I said, nothing, sir.
Those who knew him say Ford was as smart and hardworking as he was decent and honest.
I think we did a wonderful job of hiding from the American people how able this fellow was.
Gerald Ford will be buried tomorrow in Grand Rapids, Michigan, not far from his boyhood home. Darren Gersh, Nightly Business Report, Washington.
Continuing our coverage of the late President Ford, we turn to two people who have special insight into the man and his legacy. Robert Hormats is vice chairman of Goldman Sachs International and was an economic advisor in the Ford administration. Hugh Johnson is a veteran Wall Street market strategist and chairman of Johnson Illington, a money management firm. Susie Garib sat down with both men to talk about Mr. Ford and his impact on the nation's economy.
Bob, let me begin with you. President Ford took over at a very difficult time. There was the Arab oil embargo, there was inflation, there was a recession. What's your analysis of the way President Ford handled the U.S. economy?
I think he did as well as he could with a terrible situation with double-digit inflation and nearly double-digit unemployment. And he had the aftermath of this horrible Arab oil embargo and price increases. I think what he tried to do is to address at least part of it. He tried to keep government spending under control because there was an assumption that that was one of the causes of inflation. And he tried, by pulling together the oil-consuming countries in an effort to put pressure on OPEC, he tried to get oil prices down. But, of course, he did not have a very tough Federal Reserve at that point, which came later, and that was really one of the problems.
All right. Hugh, what is your assessment?
I would agree a lot with Bob. I think that really the real number one, the A marks that he gets is primarily because, you know, we had two big problems, as Bob has suggested. The unemployment rate was rising. You actually were losing jobs every month in late 74 and early 75. And the rate of inflation was at the same time very high. And he was, first of all, smart enough to recognize that inflation was really the biggest problem. And then secondly, what he did is he resisted this very strong urge to sort of jump on the side of reflating the economy. Arthur Burns was there when he was at the Federal Reserve, reflating the economy, growing the money supply too fast. The president kind of tried to resist that, and the Democratic Congress, you know, he resisted their urge to spend a lot of money to get us out of the recession, recognizing that inflation was really a big problem. I think it was very good.
Let's talk about inflation, because President Ford was ridiculed for his campaign of whip inflation now and those win buttons. But was the problems with inflation, the mishandling of it, a problem of the president, Bob, or was it a failing of the Federal Reserve, which you alluded to in your first answer?
Well, there were several causes. First of all, we'd had terrible fiscal policy beginning in the middle part of the 1960s with the way we financed the Vietnam War. In addition to that, we had very lax Federal Reserve policy, not the kind of toughness you got when Volcker was appointed later on. And then, of course, you had the big oil price spike in 73, 74 after the Yom Kippur War. So all these factors were issues. And the point that Hugh and I are both making about dealing with spending was critically important. At that time, Congress was on a big spending spree. The president vetoed bill after bill after bill to try to curtail spending. Some were overridden, but he vetoed them. He was an Eisenhower fiscal conservative, very different from people today who call themselves fiscal conservatives. He really was one in the Eisenhower tradition, and he was very tough and vetoed bills. We could use a little of that today.
Well, actually, New Yorkers remember very well those vetoes, because he also turned down giving any financial aid to New York City during its financial crisis, right, Hugh?
Yeah, that was another big part of it, and I think he did the right thing there. He didn't bail New York City out, in other words, give New York City a lot of federal money. He did go through the process of guaranteeing about $2.3 billion in loans, but no outright grant of funds to New York City. That was absolutely the right thing to do, and another demonstration of the fact that, you know, when it came to fiscal policy, when it came to economic fiscal policy in Washington, he was very good and very much resisted strong pressures from all sorts of constituencies, political constituencies, to join Arthur Burns in opening the spigots or to join the Congress in opening the spigots. He didn't do that. He was really sound.
Hugh, I want to ask you about the Wall Street's view of President Ford, because Wall Street was going through a brutal bear market when Ford became president, right?
Yeah, we were going through a bad bear market in 73 and 74. Keep in mind that bear market ended in December of 74. He took office in August of 74. So we were coming out, we were starting a bull market in December of 74. And let's also keep in mind that the economy turned around in March of 1975. So frankly, when it comes to those results, we started a bull market, we ended a recession. Wall Street was very much on the side of the president. Plus, Wall Street tends to be on the conservative side of things, so they kind of applauded his fiscal conservative and reducing regulation policies. So I think Wall Street were big fans of the president.
Bob, what would you say was the most positive achievement, economic achievement from the Ford presidency?
Well, I think he did several things. One, he brought Alan Greenspan in as chairman of the Council of Economic Advisors, bring him in the government, and that helped him to get the Fed chairmanship somewhat later. Second, he understood that you needed solidarity among the oil-consuming countries to deal with OPEC. He pulled that together. And third, he's the guy we shouldn't forget who started the Group of 7 economic summits to create cohesion among the industrialized democracies to deal with the kinds of problems that they were facing: energy, low growth, and inflation. All these things were, I think, very, very important achievements. And he started the process of deregulation. He, in his speech about whip inflation now, deregulation was a very important part of reducing inefficiency in government.
Hugh, what are your thoughts on that? Positive achievements?
Well, no, I think the positive achievement really was that he resisted that urge to open the spigots. And don't forget, as Bob and I have both told you or suggested, the unemployment rate was rising. We were losing jobs every month. Big urge to open the monetary spigots, very big urge to open the spending spigots, and he resisted that. Remember, he vetoed 66 spending bills inside of 2.5 years. So he was really a fiscal conservative, and he needed to be, or needs now, to be applauded for what he did then. That was real integrity.
Bob,
I agree with that entirely.
As you look back on the Ford presidency, were there any economic lessons that came from that chapter of American history?
One is the one Hugh and I have been talking about. You can't spend yourself out of these things irresponsibly. You have to have a very solid fiscal policy. He understood that. I think that was critically important. Second, in a global economy, we didn't talk about a global economy as much then as we do now, but he understood you had to work with the other industrialized democracies to deal with exchange rate issues, to deal with energy issues, and to deal with trade issues. He understood that very well. And he also was very tough on the oil producers. By pulling the oil-consuming countries together, he was saying, oil producers, you're going to have some counterweight if you try to arbitrarily raise prices.
Okay.
All those were very important legacies.
Gentlemen, thank you very much. Bob Hormats, Hugh Johnson, we really appreciate your thoughts and analysis.
Thank you. Happy New Year.
Thank you.
Despite the markets being closed for the day, there is other business news tonight. Nucor is getting bigger. The North Carolina-based steel producer is buying Canada's Harris Steel Group for just over $1 billion. The companies have been working together for 3 years. Nucor says Harris will operate as a separate wholly owned subsidiary, and the acquisition will immediately add to earnings. The deal needs both U.S. and Canadian regulatory approval and could close within 2 months. Boeing is off to a strong start in 2007. The jet maker announced a $1.5 billion order today for 10 of its 787 Dreamliners. The buyer? Jet Airways of Mumbai. Delivery is slated for 2011. Jet Airways is India's biggest domestic carrier. It says the new planes will help it expand to international markets, including the United States, Europe, and Asia. Boeing believes the Indian airlines will need some $70 billion in new jets over the next 2 decades as the nation's population and affluence grows.
Not such a great start to the new year for one of the nation's largest home builders. Lennar Corporation today issued a profit warning for the fourth quarter, saying it sees no housing recovery yet. The Miami-based home builder expects to lose between 88 cents and $1.28 a share for the quarter ending November 30th. That includes a write-down of up to $500 million, depending on how the company prices its unsold inventory. Lennar says new orders are down 6%, and it sees no tangible evidence of an industry turnaround.
It may have been a quiet day on Wall Street today, but the rest of the week is expected to be busy. Investors should brace themselves for a flood of economic data starting tomorrow. Erica Miller has details.
Data out this week will help determine whether the Dow's record-breaking run will continue into 2007. The first trading day of the year will kick off with the Institute for Supply Management's report on factory activity. The index is expected to come in around 49.9% in December, up slightly from November. Although a reading under 50 indicates contraction, economist Mark Vittner of Wachovia Securities thinks investors will focus on the improvement.
It looks like orders bounced back a little bit toward the end of the year and production came back a little bit. And the weather may have helped. It's been unseasonably mild across much of the country, and that may have allowed for a little bit more economic activity than takes place normally during December.
Also out tomorrow, minutes from the Federal Reserve's Open Market Committee meeting on December 12th. Economists doubt there will be any new hints from policymakers about the direction of interest rates.
I think that the real message from the minutes will be that the economy seems to be performing in line with the Fed's expectations. Inflation is slowing, inflation expectations are contained.
On Thursday, the nation's chain stores released sales figures for December, the most important month of the year. Economist Mickey Levy of Bank of America says the reports are an important barometer of consumer spending, the engine of economic growth.
Financial market participants are trying to assess whether the consumer will remain resilient as housing adjusts. So far, so good.
Stealing the spotlight Friday will be the December employment report. Economists think non-farm payrolls rose by about 110,000 after a gain of 132,000 in November. The unemployment rate is expected to hold steady at 4.5%. But some economists think the job gains will be much weaker than the market is expecting.
Beginning in December, I do expect some slowdown in the rate of employment gains, and that's why we're looking for 90,000. 90,000 increase in employment would still be consistent with the economy growing at a moderate pace.
The first week of the new year is almost always a good one for the stock market. Analysts say a positive tone of economic data this week could provide more reason for investors to buy equities. Erica Miller, Nightly Business Report, New York.
There was one major financial market open for trading in New York City today, the bond market, although it closed early. The 10-year Treasury note ended the day up 3/32 to 99 16/32. That put the yield at 4.69%. There was also an abbreviated trading session for bond futures at the Chicago Board of Trade today. That exchange and the nation's other commodity exchanges saw investors pour more than $100 billion into them last year. And this year could be another banner year for commodities. But as Diane Estabrook reports, some industry watchers say the craze over commodities may be more muted.
Analysts think the investment momentum into commodities will continue this year, but some predict that momentum could be at a slower rate. Crude oil saw a rapid price run up to around $80 a barrel in the middle of last year before settling back to the $60 range. While some analysts think crude oil prices could trend even higher again in the months ahead, Peregrine Financial Group Senior Vice President John Welsh isn't so sure. He believes the risk premium from the threat of terrorism has decreased, and some speculators have left that market.
It's probably going to remain maybe close to where it is, but there's a very good possibility that crude oil could actually decline this year toward maybe $15 or $20, back toward $40.
Still, analysts say the influence higher crude oil prices have had around the world will continue to influence other commodities. Grain is likely to be the biggest beneficiary. Demand for corn to produce ethanol has driven corn futures prices to their highest level in a decade. Tim Hannigan, Aileron Trading senior grain analyst, thinks corn prices will continue to soar this year.
A year ago, we consumed about 1 billion bushels of corn to produce ethanol. This coming season, 2007, it's estimated 3.7 billion bushels and only getting larger. We keep building the plants. We're seeing them in the private sector as well as the commercial grain companies.
Analysts think continued demand for industrial metals could help buoy their prices for at least the first part of the year. Gold is another story. Analysts aren't sure the dollar will weaken further against other currencies, sending gold prices up past $700 an ounce again. But Peregrine Financial's Welsh isn't writing off that possibility and thinks at the very least gold prices will remain volatile.
If gold starts trading, back up over $750 or $800 an ounce and starts taking out the old highs, then we're going to have to have another look at it and say what's causing this and why is this metal moving this much.
Welsh thinks consumers could also play a significant role in commodities prices this year. He says if wages continue to improve, demand for everything from food to fuel could keep commodity prices rising. Diane Estabrook, Nightly Business Report, Chicago.
Tomorrow, why keeping up with the Joneses can leave you in the poorhouse.
It's business as usual again today for Goodyear Tire and Rubber. The company's union employees went back to work this morning after 3 months on strike against the world's third largest tire maker. The deal with the United Steelworkers Union covers 14,000 employees and includes plans to shutter a Texas factory and create a health care fund for retirees.
Coffee seller Starbucks is making some of its products healthier. The Seattle-based company said today it is cutting artery-clogging trans fats from its baked goods. The change will start in company-owned stores nationwide and will be in effect tomorrow. Starbucks joins a growing number of food companies banning trans fats from their products due to health concerns about cholesterol levels.
Here's a look at what's happening tomorrow. December auto sales and November construction spending come out, along with weekly retail sales and the minutes of the December Fed meeting. Tonight's commentator has some personal thoughts on the late President Gerald Ford after reporting on Mr. Ford during his time in office. Here's Irving R. Levine, Dean Emeritus of International Studies at Lynn University and former chief economics correspondent for NBC News.
Gerald Ford inherited a batch of economic and international problems. I covered President Ford's news conference just 8 weeks after he took office, at which he called on Americans to fight inflation by planting vegetable gardens, turning down thermostats, and wearing lapel buttons with the letters WIN on them for Whip Inflation Now. It was a well-intentioned but much ridiculed effort by the new president to cure an economy suffering from inflation and stagnation. 20 months later, as part of the Ford press contingent at a Puerto Rico summit of leading industrial nations, I watched the president urge the other leaders to pursue economic growth and restrain inflation. The results were meager. I remember my disbelief covering the Ford-Carter debate when Ford insisted that there is no Soviet domination of Eastern Europe. I think Ford meant that the spirit of independence lived on in Eastern Europe despite the Soviet yoke. Years later, at an event in Bakersfield, California, chatting with Ford, I was tempted to ask the retired president to explain that bumble, but I feared giving offense to Ford. In the end, it didn't matter. It wasn't the debate stumble or the economy, but rather the Nixon pardon that ensured Ford's election defeat. I am Irving R. Levine.
Just to recap, most major financial markets were closed today to mark the funeral of former President Gerald Ford. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org. You can also email us at nbr@pbs.org.
Finally tonight, there was one unexpected bright spot in an otherwise somber funeral for the late President Ford. It came about golf. It's no secret Mr. Ford was a college football player and could have turned pro, but he had a passion for golf. So when former President George Bush addressed the mourners at the National Cathedral, he amused them by joking about how terrible Mr. Ford's golf game actually was. Bush said Ford knew his game was getting better because Ford said he was hitting fewer spectators. Now,
well, I've been told, Suzanne, that he was a much better player than generally believed.
I can't imagine that you've hit any spectators, Paul. That's Nightly Business Report for Tuesday, January 2nd. I'm Suzanne Pratt. Good night, everyone, and good night to you, Paul.
Good night, Suzanne. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments. After 50 years of worldwide investing, we see market opportunities through the eyes of experience. Franklin Templeton Investments. Gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you.